Okay, hello and good afternoon, everyone. Welcome to JFD Brokers Traders Tea Time with me, Darius Lunchauskas. Today is the 27th of September 2018. So, welcome everyone. Welcome to this Thursday's afternoon session where we're going to have a look at a few instruments. I believe are quite important right now, but before we do that, as always, let's quickly have a read through our risk disclaimers. So the content we produce does not constitute investment advice or investment recommendation. It should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. So, jumping straight into the charts. Now, the first one I want to touch on, guys, is Nikkei. Now, I've covered Nikkei this week as well, and this is where I was talking about this level here, the 24,140, which was marked here by the highs of this year, and to be more specific, the highs of the 23rd of January. Now, we just fell a few points away from that, or should I say about 50 points away from hitting that level again, and as you can see, Nikkei now reversed back to the downside and dropped below this other quite important level that we were keeping an eye on, and that's the 23,930 mark, approximately there. Now, certainly at the moment, as you can see, today's candle kind of finished in the bearish zone, and certainly if this continues, if this has a follow through this week, or should I say tomorrow, then yeah, we could see further declines here, maybe even aiming initially towards this little level right here, the start of the gap that we had, and that's approximately around the 23,580 mark. So something like that, something that could be possible like this. Certainly, again, keep your eyes on the on tomorrow's trading, specifically because, like I said, this level here, the 23,580, could play out nicely if we get a continuation selling here, if we continuation sell-off, and like I said, yep, we could test this level here. Certainly slightly below that, we do have another good potential area of support, which previously, as you can see, acted as a very nice area of resistance, and that was the well, it acted as good resistance here on the 18th of September and also the 1st of February, and that area is around the 23,500 mark. So basically just about only 80 points lower here. So keep your eyes on this, guys, because like I said, if we see a follow through, if we see a continuation here to the downside, these are the two levels to keep an eye on, the 23,580 and the 23,500. On the upside, well, if this suddenly gets back above this 23,930 level, well, all eyes are on this level that I was just talking about, the 24,140, marked by the this year's high, and yep, I mean, if that doesn't hold, we could see further acceleration to the upside here. But again, for now, just judging by this current picture, we can see that there is some bearishness kicking in a little bit here, and we could potentially see maybe a little drop here. And to be honest, maybe a bit of a correction could be quite healthy for this index if it wants to push higher later on this year. So for now, keep your eyes on that. Let's jump into Dow Jones quickly, and Dow Jones here as well, selling off a little bit. Now, as you can see here, the 3 days that we had here were marked by some bearish candles here, and again, for now, we're just going to still stick to the downside. The only thing is that, as you can see here, we are trading here above this upside support line taken from the low of the 27th of June. Certainly, if you look at this, I mean, you could probably say that yes, we still have some area here to move, if of course it wants to move towards that line again. But another quickly, and very short-term upside support line that we've got here as well is this one to probably keep in mind. Just of course it's more maybe of a tentative one, but nevertheless keep your eyes on it, and that was taken from the low here of the 15th of August. So basically this could prove to be an area where the index could stall for a little bit initially, and of course if that doesn't hold, I mean, we could see further declines here. Now the level that we're going to keep an eye on here for this a potential support zone here is around the 26,165 mark, so approximately there, guys. So certainly plus minus a few points, but nevertheless this could be a nice area to watch as well. And again, if that doesn't hold, now this is where we're going to start considering a possible touch of this upside support line taken from the low of the 28th of June that I was just talking about. So for now, again, guys, keep your eyes on this short-term upside support line, and for further declines we will need to see a good close below this area that I've got highlighted here, and that's around the 26,165. On the upside, well, again, as you can see, we moved below this. We moved from the all-time highs that we actually set here on well, actually last week on Friday, but also we moved below the highs that we saw around January time. So again, for us to get comfortable with the upside, we would need to see, of course, a good reversal here, and of course a move back above the January highs here, which were around the 26,615, but also again a nice good close above this the all-time highs that we saw here around the 26,770 mark. So a nice good close above that level could potentially open the path towards much higher levels. Let me just quickly adjust that for future reference, and again, like I said, a nice good break above that level could open the path towards much higher levels. So maybe even actually going towards the 27,000 again. But again, let's not over speculate here too much, and let's see initially what he wants to do with this short-term upside support line. Okay, now jumping into gold. Now gold, it seems like it finally made a nice move here. Certainly, as you can see, we've managed to break through this key area of support here that we had around the 1190 level, and now it's aiming for a test of the 1183. Now the 1183 acted as a very nice area of support here around the 24th of August. Certainly the big question here is this gonna limit the downside, or actually this is just going to be a gateway for further declines towards levels like 1160, which was the lowest, near the lowest point of August this year. And yep, again, like I said, we'll just have to wait and see, but a nice good close below this 1183 could potentially do the trick, and yep, lead this commodity towards these lower levels. And actually, to be honest, before it could reach the 1160 mark, this is the one to keep an eye on for now. This is the 1171 mark, approximately there. Now this could be a nice area to watch, and if that gets broken, again, like I said, I'll repeat myself, we could start aiming for the 1160. But for now, for all these lower levels, we would need to see a good close below the 1183 in order to kind of start considering a possible move lower like this. On the upside, well, it's a bit difficult to seeing this picture here on the daily chart. It's a bit difficult to talk about the upside, but if suddenly, let's say, this gets back above the 1190 level, now again, we could maybe speculate that actually the bears are not that strong yet, and we could see maybe the bulls kicking in again and potentially driving this one back up here. But for now, again, like I said, be very careful. Be very careful with today's trading, and probably the suggestion here could be to keep an eye on today's close and see where we're going to close today, and then take it from there. Now let's jump into DXY. Then this is one of another indices that I wanted to show you, and so the dollar index here is quite an interesting, building up quite an interesting story here, and basically we had this downside resistance line taken from the peak of the 15th of August, and as you can see now today we're breaking it nicely to the upside. Of course the day is not finished yet. Let me just actually zoom in here a little bit. So the day is not finished yet. The index met its resistance near the 94.75 mark. This is where the 50 EMA runs on the daily chart. Now for us to get more comfortable with the upside, we would need to see a nice good close above this level. Now this is where we could initially then aim for the 95 level, or even actually going all the way here higher towards the 95.30, or even actually towards this upper bound of the Bollinger Band that we've got here. So for now, again, keep your eyes on today's close. For now, as you can see, this is building up a nice bullish story here, and we could see further acceleration. But again, we need to see a good close above this 94.75 level in order to kind of consider further upside moves. Now another actually scenario here that you could see is potentially, basically, if let's say even if we're not going to get a nice close above that 94.75 level today, it could potentially happen tomorrow as well. So basically, if this stays below the 94.75 but actually closes above the this downside resistance line, then yep, we could see something like this potentially, and then yep, a move higher where we could then break the 94.75 tomorrow, and then yep, we're gonna stay above this level, and going into next week we could see some further acceleration here in next week. So for now, again, of course, let's not over speculate too much here, and let's see where actually this index is going to close. If it's going to close here above, wonderful, and then we could potentially aim for higher levels. If it's going to close below this level here, and but still above the downside resistance line, still we do have tomorrow's day for to see how everything's going to shape up. But if this actually is gonna go back down here, and this is gonna close below this downside resistance line, now this is where it could become tricky for the bulls, because probably the more bears could start seeing this as a potential opportunity to drive this index back down again, and yep, so we could see further declines. But again, for now, just this is where we are right now, and let's see how it develops, how today's day is going to develop. Let's jump into a few pairs now. So the one that I wanted to touch on is that EURJPY. Looking at this daily chart, we can see that today's candle is marked by some well, it's currently in the red, but this is the level to keep an eye on probably today, the 131.90. Now, as you can see here, it initially in the first half of the day it moved down here, broke this level, but now as you can see the bulls are trying to push it back above this level. So this is gonna, in a way, play out as a nice indication here where the pair would like to go later on. So for example, if we're gonna get a nice close here below, we could potentially expect further declines here, maybe aiming for the 130.85 zone, but that's of course if we going to get a close below the 131.90. If we're going to stay above this, still be very careful with the upside, because maybe the break and the close is going to happen tomorrow. So for now, just probably the suggestion here is to observe this, and if you want to aim for maybe higher levels, probably stay keep your eyes on today's highs, the 132.70, something like that. So if we would get a nice break here and a close above that level, now this is where it could potentially become interesting for the bears and for the bulls, and we could see maybe further moves higher, where towards the 133.15, or even above that 133.50. So for now, for today, keep your eyes on this 131.90. Let's see where it closes, if it's going to close above that or actually below. And the last pair I wanted to touch on quickly until I run out of time, and that's USDCAD. Now USDCAD, looking at the daily chart, I was covering this one actually a few days ago, and we had this downside resistance line that I was talking about. And actually let me jump into a 4-hour chart on this one. So we had this downside resistance line, a short-term downside resistance line. We managed to break it to the upside, and now as you can see, we've broken some key resistance levels as well. This one, the 129.75, as well as the 130.15, and now we're stuck here slightly below the 1.3065. Now the 1.3065 has been a nice area of resistance seen here around mid-September. So as you can see, we've kind of shot through it, but the bears kind of quickly pushed it back down, and now we're kind of testing it from underneath again. And certainly if this is going to close where it is right now, then we could see maybe a bit of declines here, maybe a bit of a correction to the downside, a test of this 200 EMA, or even maybe slightly lower, the 130.15 level, and then another push back to the upside. So again, for now, let's not over speculate too much, and let's see how this day is going to close and how this day kind of evolves. And let's see if actually we're going to get a nice close above this 130.65. If we do get that, then yep, we could start aiming for this level right here, the 131.10 mark, and this was the marked by the inside swing low that we saw here around the beginning of September, or to be more precise, around the 7th of September. So this level could become a reality only if we get a nice close above the 130.65 level. And on the downside, again, I will repeat myself quickly, the level to watch here is the 130.15. But if that doesn't hold, we could see further declines here towards the 129.75, which will probably initially could slow down the fall, and then we'll have to just take it from there and see how everything develops and forms. So okay guys, I hope you found it useful. Thank you very much for watching and listening, and if you want to join me tomorrow morning in my Trader's Espresso, and that's 6 o'clock GMT time, 7 o'clock British Summer Time. For now, thank you very much, and bye bye.